Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. With me, my good friend and special guest, Dr. Friday, with Dr. Friday's Tax and Financial Services. She is a tax expert for individuals and small business owners. Her business is over in Brentwood, and we're going to give you an opportunity. If you want to meet with Dr. Friday, we'll get you her contact. Well, you can just call my office, 615-376-5325. Again, for the first 10 callers, we're going to give you a free retirement income analysis, and that will include assisting you. You can bring in all your tax stuff, and we'll talk to you about your taxes and how you can reduce your taxes, hopefully for 2015, and how to do a little tax planning for 2016 to make sure you can reduce them for this year. So again, go to my office, 615-376-5325. We'll send you out a little checklist of things to bring to the meeting to make sure you get the most out of it. And I'll send you a copy of my book, 7 Steps to Financial Freedom in Retirement. There you've got, it's a great book as far as, it is a good book. It's a fun read. At least that's what I've been told, and I'm going to take it. So the first 2 chapters are going to talk about financial planning, how to look at what those income, expenses, assets, liabilities. One of the things, you want to change your life, you want to change the way things are, there's 2 parts of that are pretty much, when I have clients come in, and for those of you, sometimes, I get calls and emails that may be struggling and trying to figure out, well, what I do? Well, 2 things you got to first look at is income and expenses.
Got to cut the expenses sometimes.
So you either got to raise your income. If you're not getting the desired result, it's raise income or cut expenses, or ideally maybe both.
That's
okay.
Good.
The next part of that is assets and liabilities. A big part of what happens with income and expenses. Well, if I don't have enough income to meet my expenses, then my liabilities go up. If I can increase my income, then my assets can go up because I can save more money. So again, even though this isn't rocket science, it's from that matter, at the same time I recognize for a lot of people that come in to see me, when we start crunching numbers and everything, their eyes roll back in their head and spreadsheets make you dizzy and all that kind of stuff. But here's the thing to keep in mind. The real basics, these are principles, and most anything in life come down to the principles and values you have, and one of those is be a good saver. Okay, just start there. Live on less than you make. At least put away 10%, and ideally maybe 20% or more of what you bring in. If that goes into savings, if you pay yourself first that way. So for you out there in particular that are in your 20s and 30s, this is probably one of the biggest tips I can give you.
Even if you're a parent, the first thing to teach, if you're giving out allowances or if they're getting money for Christmas, immediately teach them that piggy bank or get a bank account. Show them where that money's supposed to go, and they're not allowed to touch it. It's only used. Teach them to give so much to charity and so much for themselves. If you learn at an age where you don't think twice about, okay, I get $100, I immediately know that $10 has to go here and $10 goes here. When you start actually making a paycheck, it is second nature, and those are the people that when they hit their 40s and 50s, they may be looking at early retirement or changing of jobs without the pressure and the being scared, because their portfolios and stuff aren't going to be totally affected by it, because they've always maximized their 401ks. They did it naturally, because I don't know about you guys, but my parents were great, but saving wasn't necessarily a part of what they taught me. So it's something you have to learn as you get older. If you can start at the young ages, you try to teach them. That's the perfect way to learn that.
Absolutely. Younger you are, the better, and it is a great lesson for parents to pass on to kids, and that is going to make a huge difference in your life. Most of my clients, I got to say, it's one of the benefits they've learned early on is they're good savers. We've got a caller we're going to go to, and this is Pauline. Pauline, welcome to the Retirement Report.
Yes. My husband recently passed away, and I had a house that we had for about 30 years, and we I sold it. Now I've made quite a bit of profit. Is there any way I can invest this money and not pay so much tax?
Can I ask you a quick question? Was this your primary home when you were living with your husband?
No.
Okay, so this was an investment property where you guys rented it out, or was it a second home?
It was just rental house.
It was a rental house. Okay, so when your husband, and was your name on that house when, was it jointly held between you and your husband?
Yes.
Okay. Hank, you want to take over?
Okay, so
For it.
yeah, this is one of the things when you if it's a property. I mean, there are all those questions that Dr. Friday was asking, because depending on those answers as to where this leads. So the next part, if it's a rental property and you sold it and you have a capital gain, all right, the next part is going to be how much of a gain it was and what your tax bracket is as to what kind of tax rates you're going to be faced with. The good news is capital gains rates typically are going to be lower than what your ordinary income tax rates are going to be. So yes, you may have some tax, but the next part is we look at how can we minimize that tax. So this is where there's what is called basis in the property. In other words, what you paid for it and monies you've put into it, in particular with improvements in that over the years, can help add to your basis, which can reduce the overall gain. Now, if you've been using that rental property for depreciation and taking that over the years, this is where that can come back and you're going to end up paying tax on that now.
No, we have, all the depreciation was taken off earlier.
Right. So unfortunately, depending on when this property, it sounds like you've had this property a long time, some of it may become recaptured depreciation, which is actually taxed at ordinary income tax, and then you'll have the capital gains. What you do definitely want to do, and whoever's been doing your taxes will want to, use the depreciation schedule and help you calculate. Your only other thing, there is a 0% capital gain rate for long-term capital gains. So depending on how much you made off of the sale of that, and actually I'm talking not how much you put in your pocket, but how much was true profit and your existing income. Did you sell it in the year in which your husband passed away?
Yes.
Okay.
No. It was the next year.
Okay, so theoretically you'd be single, so your income bracket would drop a little bit. So what you just want to do is take a look and see. And not to say, but in those kind of situations, if you have it, the best advice might have been to have actually contacted someone, because there would have been a few things we might have been able to advise you to do before. It doesn't help you, and I hate always saying that, but if someone's listening and you're in the same situation, contact the tax person or your financial, because there is 1031 exchanges. There is a possibility of maybe rolling some of that into something that might have saved you some tax dollars, but you might not be looking at a lot of tax, but you definitely want to call your tax person, because you want to go ahead and make that payment before January 15th if possible, or if you file your taxes in the next month or two, so you eliminate any kind of penalties.
I should make a payment before I file my taxes.
Do you have someone that helps you with your taxes now? Okay, so you'd want to contact them, and you'd want to ask them that question, all right? Because if you've made a big if you're going to have a big tax bill going for 2015, then yes, you might want to make an estimated payment by January 15th, just to avoid any kind of penalties or additional taxes on that money.
I'm glad you told me that. The house, the property went up where the house was, so I did make a good profit.
Well,
and it just sounds like so much of it's going to go for taxes now.
A percentage will, but you definitely want to sit down and crunch those numbers with her. Make sure that if there was any repairs, you're going to have the real estate taxes, you're going to have the sale that you paid a real estate agent most likely to sell this, so you would have the cost of that will reduce your cost. So just make sure that they have the whole picture and reduce it as much as possible.
And it's also a good idea to take a look at the rest of your financial picture, because there may be some things when you look at the overall picture. Sometimes when you're just dealing with the tax person, they're just looking at the one problem. So they're just saying, oh, here's the house thing and here's the issues all related to the house, and maybe not looking at the overall picture of other ways that we might be able to reduce your taxes, reduce your income, taxable income, which could help lower the taxes then on your on that gain. Okay, so this is one of the benefits of having. Do you have a financial advisor that you work with?
No, I don't. Since my husband did quite a bit of this himself, a lot of it's new to me. Sure. I'm having a hard time working through some of it.
Okay, well, I understand. Well, this is where having a financial advisor that can work with your tax person can be a big benefit to you and maybe help reduce that tax bill. So, again, we'll put it up again for the first 10 callers. If you'd like to call the office, Pauline, and like to, it's a free consultation, doesn't cost anything, and see if maybe there's a way we can help you, in this situation, reduce your taxes and your, overall, then just give my office a call, 615-376-5325. Debbie's there. She can take your call. She'll get your information. She'll send you out a little checklist of things you can bring to the appointment with me. And through that, I'll see if I can find ways to help you reduce your taxes. And I'll be happy to work with your tax person to, work through these things and see, ways that I do it with all my clients. All right, ways that we can reduce taxes is a big part of a good financial plan.
Well, I appreciate it. Thank you.
All right, you have a good day. Thanks for the call.
Okay.
All right, bye-bye. All right, we're going to take a quick break. If for callers calling in, please hold on. We'll get right to you as soon as we come back from this break, and more on taxes, how to keep more money in your pocket and less out of the IRS. Join us here. We'll be right back on the Retirement Report.
That's a good plan.